This is part two of my interview with Adrian Day. This is the guy who runs Peter Schiff's Euro Pacific Gold Fund. He's been in the industry for a very long time and he's very, very knowledgeable. In part one, we talked mostly about gold stocks, and in this video, we talk about how to avoid scams, how to avoid crappy companies, how to start out as a beginner investor in the industry. And also towards the end, we talk about silver stocks. So with all that, let's get right into it.
I had this mining stock company. I'm not going to name the name, but they contacted me wanting to advertise, pay to advertise on the channel. Before saying yes, I looked into them a little bit, and their market cap was sub 10 million. The CEO was being paid about $1 million a year.
Aye, aye, aye.
The CEO was receiving over $400,000 a year as a consultant to a consultancy company that he owned. Their G&A expense was $6 million a year. They had, if I remember right, 1 million in current assets, 8 million in current liabilities, and they had other red flags as well. This is what we would call in the US a dumpster fire. Like, I wouldn't touch this thing with a 10-foot pole.
Right.
But they're advertising all over YouTube. And I know there's inexperienced investors getting suckered in to buying their shares because they're advertising, hey, look how low our market cap is, and look how many ounces we have in the ground. Look how cheap we're trading. This is an incredible opportunity. But after I looked into this company a little bit, I called my dad because he's interested in mining stocks. I just called him to make sure that he doesn't own this horrible company. And he asked me, how do we stop these guys? How do we stop them from doing this? And my answer was, don't give them money. But do you have any advice for the inexperienced investor of what they can look for to make sure they're not buying companies like that?
Yeah, no, it is sad, but I'm honestly not sure what we can do about it. I really don't want to see more government regulation because, if you have government regulating what a company can say, that goes down a slippery slope pretty quickly. We've all made mistakes in our time, and we all realize a lot of those mistakes were out of naivety. And I guess people just have to realize that things are never quite as simple or as easy, as it appears. I mean, it's pretty obvious, but if a company's stock price is so cheap or a company's dividend is so high, there's normally a reason for it. And the reason is normally not a good one. People just have to learn. And the truth is, we learn most by our mistakes. I can give advice to people, like don't put too much money into, when you're starting out, don't put too much money into each company. But I mean, we learn as we go along, and we learn from our errors more than we learn from our successes. Obviously, as you say, it depends if it's an exploration company or a royalty company or a major miner. But if we're talking about smaller exploration companies, again, to me, but there's two critical things: people and money. For me, the properties that they have are a distant third, because good people with money will kill a bad property and move on, and they'll be successful eventually. Bad people, even if they have money, I don't care how good the property is, they'll manage to find a way that investors don't succeed. So to me, people and money are the two most important things. Money is a little easier to quantify. You've got to have, as I said, a runway. An exploration company, I want to see at least an 18-month runway. So that whatever plans they have, including G&A, whatever plans they have, they can execute those plans comfortably with the money they have. Again, you don't want to see all the money. You don't want to see 3/4 of the money raised going into G&A. And the example you gave, I mean, I can give, I don't know the company you're talking about, but I can give, similar examples where 75% of the money raised simply goes to paying salaries and overhead. And you don't want to see that, obviously. So the financial end is a little easier than the people end. I think with people, one thing would be to, if you know people in the business, if you use a broker who's in, let's say you have an account with Sprott Resources, where those people, know the mining business, just ask what the person's reputation is. If you know someone at a mining company, ask what the person's reputation is. If you go to a mining show, for example, you can always ask people at other booths. You see a Quebec explorer, ask a CEO of another Quebec explorer. And frankly, if a CEO won't tell you, because nobody wants to be going around bad mouthing, go back when the CEO is not there and just talk to, the booth, whoever's handling the booth, because they probably know and they'd be more happy to tell you. So just ask around. So the reputation of the person, frankly, whether they've been successful or not. The first question I would always ask is, what's your history in the business? What other companies have you been CEO or COO of? And then just look at what happened to those companies. That's a pretty good, because the person that's been successful once and twice will probably be successful the third and fourth time. And the person that's been a total failure, for 10 years, will probably continue to be a failure from our point of view, the investor's point of view. So I think those things are important. I mean, for me, people is critical. I'm in the business full time, of course, but I don't make significant investments in exploration companies unless I get to know the people and spend time with them. And if they have mining projects, I like to see how that person interacts with the local community. Do they have a good relationship? Do people welcome the CEO coming into the mining camp? I've been on mining trips where, the cook of the mining camp will come running out and will hug the CEO and, how's your wife? How's your children? And he will say, how's your little girl doing now? Because he knows the people. I've been on other mining trips where the guy goes down literally with Gucci shoes and is sort of going like this, stepping over the mud. And there's a sort of silence falls on the camp. And this guy can't tell you the name of anyone there. Well, that's not a good sign. Because if you're in the mining business, particularly the exploration business, you've just got to have good relationships with the local people. Now, you don't expect everyone who's going to make an investment in a junior company to go on a mining trip. But you can ask around if you know people. And of course, the obvious advice is don't take your investment advice from an advertisement. No offense, because you have, that's how you pay for your channel. But, an advertisement or promo in the mail or whatever should only be a starting point.
Sure. So obviously people are really important to you. Who's the team behind the company is the single most important thing to you. But
Sure.
Let's say that I'm a novice investor and I don't have an experienced money manager like you. We'll get to what you offer in a little bit here, but I don't have someone like you to ask, hey, what's this person's reputation? And I haven't been to any mining stock conferences, and I'm so new into the business that I don't know the name Ross Beatty. I don't know the name Robert Quartermain. I don't know all these other superstars who have been around with success after success. So I don't know the difference between somebody who's really good and somebody who has no experience whatsoever. Do you have any specific resources that a beginner investor could look into to see that person's history and what they've done?
Yeah, a little, and unfortunately not as much as you might think, but I'll come to that in a second after I say, if I would say for people who really don't know much about the business and recognize, because the first rule of life is to know thyself, know what you know and know what you don't know what you're good at, know what you're bad at. But, and most people don't have that, knowledge, self-knowledge. But if you know that you're new and you don't really understand much, then I would say just stick with the major companies. Just stick. I don't particularly like Newmont, but I mean, you're better off with Newmont than you are with Consolidated Ajax, which is my fictional junior. So stick with the seniors, and I do that when I'm investing in a new area. If I want to buy biotech, I mean, there's hundreds of biotech companies promising you 100-to-1 returns, but I just don't know enough about that business, that sector, but I'm not going to invest in those companies. And I'll stick with the larger companies, the solid companies that have been around. And I'll miss out on the 10-for-1 and 100-to-1 returns. Same in uranium. There's people I know who are very strong on uranium, but Lobo Tigre, for example. But I'm not as knowledgeable on all the smaller uranium companies as he is. So I tend to stick with the bigger ones, with the physical uranium, the Sprott Physical Trust, with Cameco, with Denison, with companies like that. And I don't go very far down the food chain. So that would be the first thing. There's a newsletter called Exploration Insights, which is run by Joe Mazumdar. He took it over from Brent Cook. And they have, it's an expensive newsletter. It's for investors who are serious in the junior sector. I subscribe. It's good, but they do have a lot of free stuff on their website, articles on how to read press releases. That would be a good one for a beginner. Just what are the red flags in a press release to warn you that what you're being told may not be the whole story? Because often it's not that the people are lying, it's just that they're not telling you the whole story, right? And that's important. So they have a lot of good articles on their website. Yeah, there just simply aren't that many good resources, frankly. I wrote a book. Oh my gosh, it is exactly 10 years now. It's called Investing in Resources. And the first half of the book had a lot of the more, long-term fundamental way of looking at and analyzing different resources. The second half of the book is just so totally out of date, it's not worth reading. But the first half of the book is still, I think, there's a lot of good advice in there. But yeah, there just aren't that many, good. There's no one book I can recommend. There's some books on how to buy gold, but they tend to talk about whether it's better to buy gold coins or gold bars and, that kind of stuff. The other thing I should mention, my friend and fellow Puerto Rican, Lobo Tigre, he has a free newsletter that comes out once a week. I think it's Saturdays. I mean, the newsletter is expensive, but he has a free Saturday service, the beginner should definitely sign up for. And over, a few months, you'll begin to, get a lot of good advice and good information. He's not going to tell you specific stocks to buy or specific stocks to keep away from in that free service, but he will give you a lot of advice.
Okay, well, thank you for those resources. And by the way, earlier you mentioned no disrespect your channel. That's partially how you make your living with your channel. Well, like I do, but I don't, because like with that particular company, after I looked into them, I politely told them to pound sand, and there's no way I'm letting you advertise to my audience.
Well, I appreciate you doing that, because there's too many people in this business, frankly, who will turn a blind eye and say, hey, it's not my, company conferences will just accept anyone as an exhibitor if they pay a check. And I think that's a huge mistake, because to some extent or another, your reputation gets reflected onto everybody who advertises. If you're a conference organizer, your reputation gets reflected onto everyone that's exhibiting, and vice versa.
Yeah, for sure.
Kudos.
I have a hard time finding a silver company that trades at a good value, a value that I'm willing to pay. And I feel like the silver companies get a premium just because they have silver in their name. Do you agree? And do you think they deserve that valuation? I can't justify paying it in most cases.
Well, you're right. Silver companies, let's just say silver companies for now. Silver companies do have a premium. There's no question. And you have to go all the way back to the fundamentals of the silver market, because everybody focuses on the fact that, they have industrial demand and the demand is different from it was and so on. But the other side of the equation is the supply. You go back 40 years and something like 80% of world silver production was primary silver production. Today, something like 75% of silver is byproduct. And some of it is byproduct, and this has implications. Some of it is byproduct of gold mines, of course, but most of it is byproduct of zinc mines, lead mines, and other base metal mines. The reason that's important is because it means that silver production is not responsive to changes in the silver price in the way the, say, the gold production is. We all know that it takes time, to slow down production or build up production. But if the gold price collapses, to $400, people will put expansions on hold and exploration budgets will go down and everything else. But that doesn't happen with silver because it's all byproduct. The zinc producer in Peru is not going to cut his zinc production because the price of silver goes down. And conversely, he's not going to increase his production of zinc because the price of silver goes up. Silver tends to be very, very, very leveraged, as we know. Now, the problem with all of this, the problem with 75% of silver production being byproduct is it means that there are very few pure silver mines. There's some in Mexico. Most of the ones in the Coeur d'Alene region and Idaho, they're either too small or they've closed down. Mexico has a lot of pure ones. Bolivia has some pure ones. Russia has some good silver mines. But there's not an awful lot of them. And that also translates to the companies. So you look at Fortuna Silver or Pan American Silver or Hecla Silver, and they get in varying degrees, a minority of their revenue is from silver, as low as 20% in some cases, as you know. So they're not silver companies at all, but because they have silver in their name, they tend to still respond when the price of silver goes up. I don't know if this is laziness on the part of investors or brokers. I mean, I suspect it's just a matter of, I'm buying Pan American Silver and Fortuna Silver because when silver goes up, they'll go up. And I know they're not silver, but when silver goes up, they'll go up. So I'm buying them. I think also, the other thing is person that's not very knowledgeable on this sector. If he has a broker, he calls a broker and says, I want to buy some silver stocks. And the broker just pulls out from his memory bank, will buy Hecla and Pan American, thinking they're silver companies. So yeah, no, it's a real problem. So so they certainly don't deserve a silver premium. Although, as I said, when the silver price moves, people will go to those stocks with silver in their name. There's no question about it. And that's going to carry on, for the foreseeable future. I don't see that changing. Pan American, of course, when Escobar comes on, that will double their silver production. So I think that will make them a little bit more of a legitimate silver company. You did see what happened with Fortuna Silver when they bought Rox Gold, which is all gold, as well as West Africa, but it's all gold. The stock got significant pushback from investors on that. So, I think people are paying attention, but in answer to your question, do they deserve a premium, a silver premium? The answer would be no. That's not to say I don't like Pan American and I don't like Fortuna. I don't want to get that impression, but they don't necessarily deserve, they don't deserve a silver premium.
Sure. And my personal favorite silver company doesn't even have silver in the name. It's Wheaton Precious Metals, and they're way more silver than Fortuna or Pan American.
It's funny you say it, because I was just going to say that, but I thought I'd rambled on long enough. Yeah, Wheaton of the major companies, other than say Fresnillo, which obviously is silver, of the major mining companies, that's the one with the largest percentage of silver. I do like Silvercrest, not exceptionally cheap, but solid balance sheet, good management, and it is silver. So it is appropriate that responds to higher silver prices. But I get a lot of silver exposure, frankly, through other companies. Origin, I mentioned earlier. So Origin's only producing royalty at the moment is Ermitaño. That is silver. So it's legitimate when the price of silver goes up that the price of Origin responds to some degree because they're getting revenue from silver.
But this has all been about precious metals, but I know you invest in a lot more than precious metals. So is there anything outside the precious metal space that is appealing to you today?
It's a good question. And frankly, we all know what's happened to global markets over the last 5 years. And most things, frankly, are just terribly overvalued right now. Yeah, I'm not finding a lot of value. I'm buying a few areas. One will be really solid global blue chips like Nestle that are not super, super cheap, but nor very expensive. And they're just rock solid companies that have consistent growth. So Nestle, for example, over 50 years, has increased its revenue every single year and has increased its dividend every year except 2 when it kept it stable. So good long-term track record and obviously very diversified and strong balance sheet. So that's number one, but they're few and far between because most of those companies are very overvalued. We're looking opportunistically at various markets that are undervalued on a historic basis. There's 2 that seem attractive to me right now. One is the UK market. And even though the UK market is actually at an all-time high in British pounds, if you price it in US dollars, it's down 50% from like 2011. So it's down meaningfully, and there's obviously some good quality companies in Britain. It's obviously well regulated. It's a well regulated market, but they tend to. You get a lot of companies that pay decent dividends in Britain. So these are not quick short term trades, but I think you can find good companies. And then the other place we're looking at is Hong Kong and Singapore. Hong Kong, there's some incredibly cheap companies there. But of course, with Hong Kong, you have the big risk of China, whether the US is going to increase sanctions. And I mean, ultimately, is China going to invade Taiwan? And that would hurt all the stocks. But some of the stocks there are incredibly undervalued. Some of the Singapore companies that don't have the same risk are also pretty cheap. So that's the second thing. And then the third thing, I like some of the high income stocks in the US. Excuse me. So there's a company called Ares, for example. It's a business development company. Business development companies lend money to small and medium-sized businesses, typically private companies. Sometimes they get equity kickers, but the main business is lending money to these people. And a company like Ares, for example, despite the fact that it's the largest of the BDCs, despite the fact that the stock price has gone up a lot, the current yield is still almost 10%, 9.7%. They have high yields because they don't pay tax at the corporate level. It's like a REIT. It flows through to the shareholders who pay tax on the dividends, but there's no tax at the corporate level. So you're getting a 9% dividend yield, which is fully covered by net investment income, which is the metric the BDCs use, fully covered. And in fact, in the case of Ares, they have 3 quarters worth of dividends, in reserve. So they're always 3 quarters behind in distributing the dividends, which means there's a cushion if there's a temporary downturn. So in COVID, for example, when a lot of small businesses were unable to service the debt, they didn't have to cut the dividend because they had the cushion. So, I think that's those, and there's several of those, but I think are solid companies for people looking for income, but knowing that the stock prices tend to be volatile. So a company like Ares, for example, has gone from 14 to 20 to 16 to 21 to 18 to 22 to 18 to 20, over the last 2 years. They're very volatile. But so long as you like the dividend you're getting and they keep on paying the dividend, I don't care too much about the volatility.
Okay, excellent. That gives me a lot of places to start looking and start doing some research. Earlier, I mentioned your asset management service, and also I've been a loyal paid subscriber to your newsletter for a few years, and I've been very happy with that. Why don't you tell people about how they can contact you, how they can find you, and what services you offer?
The best place to look is adrianday.com, the website, and then you can swipe left, a bit like Tinder, right? Swipe left for the newsletter and swipe right for the money management. They're 2 separate services. The money management obviously is personalized, and we offer a very personalized service. We don't manage to a model, but we personalize the accounts depending on whether people want income, whether they're concerned about tax losses, et cetera, et cetera. And then the newsletter, which is obviously not personalized. Yeah, and we've got a lot of videos, a lot of articles up there people can look at.
I'm surprised you know the Tinder reference. The dating scene must be pretty good in Puerto Rico.
That's no. I'm way past that.
All right. Well, thanks for joining me today, Adrian. I really appreciate it. It's been very informative, and hope we can do it again soon.
Yeah, thank you very much, Jordan. But come down and visit.
Adrian mentioned that novice investors often have to make a lot of mistakes before they can end up being a successful investor in this industry. And that was definitely true for me. I started investing in this industry a little after high school, and I've been doing it for about 17 years. But my first 10 years, it was mostly me losing, mostly me making a lot of mistakes. I've made a lot of mistakes along the way. I've learned a lot of lessons, and the truth is that has made me a better investor today. Now, that's one of the reasons why I started this channel, because I thought that I had a lot of knowledge that I could share with people.